Howdy y'all, Goose here, and this is actually my first recording, so um, bear with me. If audio or video has any issues, please let me know in the comments, and make sure I try to make these videos better quality every time, and make sure I provide some good value. This is also for myself. Got to be honest, this is to document my journey. I'd love to look back on these videos, hopefully in a few months, and just be happy that I made the right choices and stuck to my strategy, took the right steps to get to where I want to go, which is essentially $1 million in funded accounts. So you might have seen some posts potentially, but I'm using Earn to Trade along with the Quant Tower platform to essentially embark on my own trading journey using their trader career path evaluation. So if you have any interest in that, feel free to send me a DM and I'll kind of explain how that all works. But for now, let's talk about the trades today. Essentially, I saw trades on NQ. There were actually two, and really good setups, slightly different strategies on each one. I'll go over really quickly what I saw. Market's about to close right now, so got nothing really looking as far as there's no trades that I'm looking at taking or closing out. So figured I'd make this video. What we saw this morning before the market opened over here, if we pop over to the left side, I'm on the hourly charts. I keep those higher time frames on my left and kind of lower time frame scoped in on the right. Over here on the 1 hour, we see that over the last few days, so first of all, these lines are different levels that I use, key levels. These orange ones right here, the bright orange ones are going to be weeklies. The lighter, more yellow ones are my dailies. So as we came through into the night, we kind of created a new daily level right there, came back out of it, and we pushed right through this weekly. And right before open, we were considering making our way up to this other daily level. So right here on the right side, the opening candle starts right where this green bar is. That's the opening print. We popped up out of there really strong, and then started seeing some resistance. And if you look over on the left side, I have my crosshair synced, but we start wicking back right around this daily level right here. And I can, for those of you that want to kind of see how I make these, let me know. I'm happy to kind of show that. But I got to give credit on that. I actually, this method was learned from someone else, and totally fine giving credit to them. Mr. 28 Trades, he's, if you know him, he has his own system. So I've seen it work pretty well, and I've kind of used it in my own trading. So in any case, this is a daily level here that we had. We started seeing some wicking down in that area, out the open, weak candles as well. Not only just the bearish candle here, small green, even this red one here is still, it's kind of an indecision candle, but it's not great. And, especially when you're looking at the hourly as this is forming, you start to see, pretty big wick coming in. So I'm just going to slowly kind of, move this chart over here. But essentially, the trade you could have taken was right up in here for this daily level. You could have, as we were coming right up in here, and we have the rejection and this small green candle with the wick, somewhere in here, you could have taken a trade. I'll just go ahead and mark it up for visibility. I did not actually take this trade in real life. I was watching it, but I'm still waiting for my funded account. So for me, I was just kind of bird watching today. But I was looking at this and thinking this is something I would take, and just kind of watched it happen. So again, knowing how to identify the trades one thing, and actually taking it's another. But you could have essentially went for this bottom liquidity, like assuming that we were so strong out of the gate, we want to come back down and just test low of day, right? So low of day wouldn't have had to go too far. So like this could have been your trade right here, essentially. Enter in off those weak candles, risking 100 ticks essentially to make around 300, and that's a between 2 to 3 risk reward is sort of where I like to live. Not too bad of a trade. I would have taken it maybe scaling in. This type of trade, I don't like to go all in at once. If you're watching this in real time, you're of course nervous that we were so strong out the gate. How do we know, right? So again, you're using, well, I'm using my trust in my key level, sorry, up here, this key level, as well as support turned resistance. So you look back and you'll see these touches we had a few days back, right? Really strong touches off of that 14,816 area. They were all kind of in that same place. So as we start seeing weakness there, there's just a really good chance that we'll get at least, a solid 2R move, putting our stop just above that high. So that worked out actually really nicely. And again, I'll admit I didn't take this trade live. That's only because I've passed my evaluation. I'm simply waiting for my live account to get set up. It takes about 2 business days worth of trade. So hopefully I'm going to be up here very shortly. But yeah, because of that, I didn't. There's a good chance maybe I wouldn't have taken it. Again, taking a trade for real in the moment when there's actual consequences behind it is very different than looking back, like I am right now, for one, or doing it on a simulator. So it is very different. But nonetheless, I think doing this recap and looking back is important because it helps you for the next time, right? It helps you when you do see this trade and something is on the line to pull the trigger and be confident. So that's kind of why we're doing this and why I want to kind of document my journey. But what I'm going to do is I'm going to move these labels over to the left side so they're out of the way. But yeah, pretty decent trade there. I wouldn't have gotten too greedy. You could have even had like a trailing stop or, some type of, yeah, I would have aimed for liquidity. So this is pretty much exactly how I would have taken it. But you would have definitely been break even. I mean, there's no way you would have lost this trade. It wasn't the massive move. But the second trade is actually, I think, an even better trade. So what happens here? We pop back up and make a new low, right? Now that movement right there, I'm going to switch this to the 3 minute because this is what I like to do. I like to bounce between the 3 minute, the 5 minute, the 1 minute, and using the hourly, the 4 hour, and the daily for my higher time frame to get an idea of what's going on. But bouncing between the 3 and the 5 minute, that's almost like, I'm constantly doing that. So there's not a lot of difference, but sometimes the 5 minute will clean things up just a little bit nicer. For what I like to call the ICT OTE, strategy, that's one of my bread and butter techniques. That's pretty much the 3 minute always for me. That just, I don't know, I just have practiced it like that. I've back tested it like that. So that's the time frame I'm just most comfortable with. But essentially, I'm going to make this a little smaller so it's on the way. What we're looking for here is breaking through some key liquidity point. And because we had at that time the low of day, right? This is the opening candle, and we make a new low of day. We know there's liquidity here. There's people that jumped in, that bought for whatever reason, or even if they got in the middle of this bullish candle up or on the second candle here, a lot of those buyers would be putting their stops just underneath that low of day. So that's kind of how you know there's liquidity sitting, right? One of the requirements for this OTE strategy is tapping liquidity, and that could be a trend line liquidity, a support or resistance liquidity like this. Other types of liquidity are there too, but those are the two main ones, is like a support or resistance or a trend line. So in this case, we tap that support liquidity. We, right here on this red candle, we push down, and then next candle we quickly push back up. So we've tapped that liquidity, have a huge, what I refer to as a displacement, can also just be called strength. These big candles here pushing us up and out give us an indication that buyers are really strong down here. I'm not entering a trade at this point though. I'm pretty much watching massive displacement. We actually make high a day off of this, right? So this is good though. This basically means we have some structure being formed. This is what the would be called the strong high that created this low. That is then displaced, causing a market structure shift. So I use these little orange arrows to kind of track that on my charts. But yeah, and then you have these fair value gaps. So if you've ever looked at ICT concepts, you'll hear about fair value gaps. The fair value gaps on the 3 minute, I don't pay a lot of attention to. On the 1 minute, I would. So there's two things I would have done here. I would have seen this displacement. And right away, yeah, maybe pop down to the 1 minute and see if we can find. So I would have popped into the 1 minute and look to see where these gaps are. There's actually quite a bit of them. We have one here, which is pretty down, down low. And that's actually the one that seemed like, yeah, it does seem like the one to use. There's one up here. So my only hesitation with this gap is it's so far into the move that you are going to be risking a lot, right? Because we know that we tapped liquidity down here. We're going to want to put our stops basically there or even below there, ideally. But you don't want to be risking quite this much. At least I don't like to. So I use the fib tool to get a good gauge on what I'm risking and kind of an expected pullback area. And when I see overlap between the fib tool and say a fair value gap, looks like, oh, you know what? There is a very small fair value gap that lies right on there too, right here. So a few options. I would have said no to this one. I'm just going to go ahead and delete it because that's just, I mean, some people do take trades off of a 50% retracement. And here, you are in a fair value gap. You do have some confluence there, but it's just not quite my style. It's not quite enough. So this fair value gap down here is more the one I would want to use. But I weight this 70.1 area even more. That's just, again, a level I've back tested and I've seen from other people who've kind of taught me this OT strategy that is very likely to hit. And if it hits, very likely to give you the move up to the negative 20%, which, spoiler alert, we do get to. So, I'm not drawing the arrow. That's weird. Oh, because, got it. Yeah, there's the area. Okay, so, anyways, what you can see is we come right down into that 70.1 area level, and it is in that fair value gap. So that's where I would take the trade, just because it's overlap. You could have waited for the start of this fair value gap down here. I just think that's a little greedy because 70.1 is a big amount of retracement. There's of course times it does like today push past that, but it's not always guaranteed. A lot of the times you'll barely get tapped in and price can move. So I think just for me, I would have taken it right here because it sat in a fair value gap. Maybe if this fair value gap didn't exist, then maybe I would have had my entry right here at the top of this gap. But again, I like to use the 1 minute for that, for the gaps. That's really the only thing I use the 1 minute charts for. So I would have identified those gaps ahead of time, come back here on the 3 minute, and I would have just been waiting, essentially, waiting for price to come to you, right, is what they say you want to try and do. We've been sitting here waiting. Price would have came right down in, tapped us in. A few wicks below our entry, but not too bad because look at the 3 minute candles. They're all wicking back up really nicely. So showing some good strong buying action there. Our stop would have been below low of day. So again, risking a good 3R return here. These levels are just kind of approximate. I mean, sometimes I have my stop, a little bit below this low of day. Sometimes it's right at it. Generally, I do at least 5 points on NQ below this low, previous low. And then same thing up here. I mean, I guess realistically, I would have actually closed this trade out right out at the negative 27 mark on the fib. We would have been holding this trade at the 0% level here. So on this candle, we would have actually moved our stops to break even. So we wouldn't have lost anything on the trade, but no worries. We wouldn't have even gotten close to that. We would have had a nice, time just watching the trade go to our TP. So that was really the major winning trade on the day. And then you see we have this garbage, messy consolidation right after we would have gotten out. And sure, we did miss out on some points up here. Honestly, who cares, right? As soon as you start having a system and you're trading it to a T and it's working, I mean, this happened to me at least. My FOMO went away. I really could care less about this. I mean, this is such a good move. 3R return is huge. I mean, I'm happy with 2, even a 1.8 or something like that. So, 3Rs are kind of rare for me. I would have taken this with a little bit smaller size because the stop required about 150 ticks. Normally, I I'm risking about 100 ticks for my downside. So yeah, I would have played it a little bit smaller on these micros, not as much as normal. But again, that's kind of going into risk management. Essentially, those were the 2 trades for today. There was the opportunity to take that same kind of trade on ES. You can see, we come down here, we make the low, right? We tap this liquidity from the previous low of day and push past it. So here's your market structure shift here. And then we come back down, and if you do the same process, draw the fib, we actually come well below the 70.1 and get very close to where our stop would be. So it would have been a little bit scarier, but the trade would have worked. The risk reward wouldn't have been as good, just the way the structure of ES was coming together. But the reason, and this is hindsight, I get that, but the reason why I would have taken it on NQ, there's a few different things. You have our opening print is this green line, and notice how we're entering really right above that key level. It's another key level you can use, and that just kind of gives it extra support in my eyes. So that's the big reason I would have went NQ. Let's see if the ES chart had a fair value gap on the 1 minute, just out of curiosity. So, for the heck of it, if we look on ES. Yeah, okay. So there was a fair value gap on the displacement too. So, you could have, yeah, I mean, you could have gotten in there. So there's a confluence, right? The 70.1, which sits with the fair value gap. So it's a valid trade on either one. The reason that kind of would have pushed me over again is mainly this opening print level that I like to use. I like to be above that if I'm going long and below it if I'm going short. So for me, it just would have made me want to take the trade on NQ, which actually, worked out even better. Just the less scary. We got, less close to our stop. So those are the 2 trades on the day that I would have taken. Again, I kind of took them mentally as I was just watching the chart. Wanted to do a recap anyways, to kind of share knowledge for anyone looking to get funded or looking to grow a small account. These are some trades you could have taken on futures. If you have any questions on how to get set up with an account to get funded, let me know in the comments or shoot me a DM. There is still a 70% off deal on the smaller Intertrade Trader Career Path account, which is a great deal. It's like less than $50 a month, and you get a free reset every month. So for anyone starting out, that's just tremendous value. You have the opportunity to make back your money in like less than a month if you're, again, diligent, stick to your rules, follow a very set trading plan that has an edge. Yeah, it's really not that bad. But again, psychology is a whole nother beast. I'm not going to focus too much on that. There's a lot of materials out there. For me, my goal on this is just to kind of consolidate my strategies, which I've taken again from a few other people that are out there. Some of them you may have heard of, and I'm not going to go through all the list of names because I feel like I've watched almost everybody out there. I spend most of my time on YouTube, on Instagram, searching. So lately, I've kind of pulled back. I feel like I have enough to be a viable trader. And again, these are the trades I would have taken today. 2 for 2, so not too shabby. All right, thanks for joining in, guys. Hope to make more of these videos here soon. And if you liked it, please give me a like or subscribe, just to kind of let me know you want these to keep coming out. Awesome. Thanks.